Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. Politics and geopolitics are taking the center stage, causing turmoil in the markets. In Japan, political uncertainties arise as the ruling coalition actually lost the majority in the general elections, leading to a race between the major blocs to form the government. Oil prices tumbled more than 5% after developments over the Israeli attack avoided any crude oil facilities in Iran, easing immediate concerns over supply disruptions. The US bond market, already stung by the worst sell off in 6 months, now heads into a crucial 2 week stretch. A series of market moving events are coming in rapid succession, including the Treasury Department's announcements on debt sales, monthly payroll figures, PCE, the upcoming presidential election, and of course, the Federal Reserve's meeting. Good morning, JK. Do you think the current pricing for bonds reflect US exceptionalism, and has the risk shifted towards the data showing a slowing US economy? What's your thoughts?
Good morning, Swaraj. Yeah, I think the bond prices are reflecting definitely the higher growth prospects, relative growth prospects of US, and also the belief that the US deficits are not going to come down, and that will mean more borrowing, and even inflation unlikely to come down much when there are deficit spending from the government. So I think US rates are not going to be as low as was assumed to be some time back. Now there are analysts saying that till 2025 we may have only 100 basis points of cut by the Fed. So that's one extreme that we have got into now. So bond prices are not going to go up anytime soon. Yields will remain high, at least until we get some credible plans by the new government in US for addressing the deficit. But overall, it looks like all roads are leading the dollar, because if be it the Japanese political uncertainty after the elections, structural weakness of the eurozone playing out in various data points, and also interest rate expectations, China jitters ahead of US elections, expecting higher tariffs, Chinese yuan are becoming vulnerable. All these things, and we have so many events lined up starting on Wednesday with the US GDP also. So when we have so much lined up, and also in general the atmosphere is dollar bullish, people tend to be with that trend, and that's what is likely to happen until we get a clarity on various crucial things. The main things that I would look at will be the PCE on 31st. PCE on 31st, and then the US election, followed by the FOMC. These will be, of course, the most crucial things to watch for. Until there is clarity on this, by default, market is going to be long of dollars. And the buildup is, of course, not really anything different, because even the two reports that we got on Friday, the durable goods orders and also the Michigan consumer sentiment, all of them came much better than expected. And further, helping the dollar was the news from Europe, which has not been encouraging. We did have some IFO business sentiment from Germany showing some improvement, but the overall sense is that German economy as well as Eurozone, in fact, are facing a deeper slowdown because of the structural issues of the region. And another bad news over the weekend was the French credit rating put on a negative outlook by Moody's, although the ratings itself was retained at AA2, but there is a lot of concern that risks of France's credit profile are heightened by political and institutional environment that is not conducive to better policy measures that will deliver sustained developments and budget balance. So it's a clear indication of where the French region is headed, and of course it's another negative for the Europe. So adding to dollar's strength. What I would say actually geopolitics was a positive development for overall for the risk because Israel carried out what is described as a precise and targeted airstrikes on Iran in retaliation for their strike earlier in the month. But while Iran said that strategic strikes against militaries, were killing four soldiers, there were early indications that attacks were more limited than had been feared. And in fact, Israeli attacks were not directed at Iran, and they have been directed towards eliminating some of the militant groups which Iran has supported. US officials said this should be the end of the direct exchange of fire between Israel and Iran. Even Iran's foreign ministry said it was entitled and obligated to defend itself. But Tehran recognizes its responsibilities towards regional peace and security. So I'm just describing this just to see that yesterday's attack was not something of a big concern for the market. That's reflected actually in the oil prices, which have come down. So that's among the overall scenario. This is one thing that actually supports the sentiment. But I think dollar remains big. Bond yields remain high as well. Stocks are going to be volatile because it's also a mega week when the big tech companies in US are going to be announcing their results. So that part of the market will be slightly nervous. Otherwise, I think overall, I think this status quo of dollar strength will continue. In this scenario, I don't know when the dollar rupee will also reflect the strength of the dollar. As of now, dollar remaining at its highest level against the INR is also reflecting where the dollar index is heading. Even last time when the dollar index was at 106, dollar rupee was at even slightly lower level. The only difference being that currently we are seeing huge outflows from FIS, but that was not the case when we were earlier at 106 in the dollar index. So that makes all the huge difference. If we do see continued flows, we can probably see the dollar rupee also slightly inching up higher. Nothing big, but definitely reflecting the overall dollar strength. So start off today with light data, but I think pace picks up from day after tomorrow with US GDP and then UK budget and more to come later. Yeah, thank you.
Thank you, JK. And just quickly summarizing, it seems it's all a game of expectations. Earlier, expectation was of a sharp falling inflation and growth, but now growth is expected to be stable and inflation remains sticky, which is what is being reflected by the bond yields, which is pricing all sorts of events lined up. And there's a lot of uncertainty ahead. Because we have the Japanese politics, which is going to be an ongoing thing. Chinese stimulus, what potential property sector stimulus the government offers. We have a host of US data, including GDP, PCE, NFP, unemployment rates, and of course the mega event, which is the US elections. And in between all of that, even geopolitical turmoils need to be paid heed to. So eventful weeks ahead. So that's going to be causing a lot of volatility. That's it from Australia. Keep tuning in as we take you through all these developments. Thanks for listening, and we'll see you all tomorrow.